Why do some analysts believe XRP could reach $5 so quickly? The recent pullback in XRP has tested trader patience, but analysts argue it has not damaged the broader trend. Short-term dips, like the move from $2.12 to $2.09, are often seen during healthy uptrends, especially after strong advances. Rather than signaling weakness, these pauses tend to cool overheated momentum, allowing markets to reset before continuing higher. From a structural standpoint, XRP continues to hold higher lows on the daily chart, a key characteristic of bullish market structure. Price remains above prior resistance zones that have flipped into support, suggesting that buyers still dominate the broader trend. This reinforces the idea that the market is consolidating, not reversing. The $5 price level carries strong psychological significance. When momentum-driven markets regain confidence and break resistance, sidelined capital often rushes back in. Analysts stress that this move wouldn't be linear. Volatility is expected, but as long as structure holds, the confidence behind the $5 projection remains intact. In this next report, we have the big question. Could a deeper XRP dip actually set the stage for a $27 surge? CoinSkid CoinSkid's analysis introduces a less comfortable but potentially powerful scenario. While XRP currently trades near $2, historical patterns suggest that markets often form higher yearly bottoms before explosive rallies. His projected his projected 2026 support at $1.14 is based on long-term technical behavior rather than emotion-driven forecast. This projection is tied to XRP's breakout from a 7-year symmetrical triangle in late 2024. According to Elliott wave theory, XRP completed wave 1 during its surge to $3.40, meaning the current decline may represent a wave 2 correction. Such corrections are known for being deep, frustrating, and confidence shaking. If the correction completes as expected, CoinSkid suggests XRP could enter a powerful Wave 3 expansion, historically the strongest phase, opening the door to a $27 upside scenario. While speculative, this analysis highlights how patience during weakness can be critical in long-term trend cycles. This post came from Crypto Wizard, and the major question here is XRP showing the same signal that preceded its last major explosion? Crypto Wizard here points to prolonged consolidation as the key signal. In 2024, XRP spent months trading sideways below $1, frustrating investors before suddenly breaking out and rallying to $3.40. That move followed a tightening structure where volatility compressed before expanding aggressively. A similar setup appears to be forming again. Since early 2025, XRP has largely ranged between $1.60 and $3.60, with the recent fourth quarter decline creating another narrowing price pattern. These formations often signal that selling pressure is weakening rather than strengthening. If XRP replicates even a portion of its previous breakout percentage, the upside could be substantial. Analysts emphasize that structure matters more than short-term price noise, and this repeating pattern is why XRP remains under close technical watch. This next post is from Chart Nerd, And our main question here is, how does Standard Chartered's tokenization push affect XRP's long-term role? Standard Chartered's remarks at Cybus 2025 reveal that institutional finance is moving beyond experimentation into real deployment. Clients now demand not just data, but instant movement of value, a capability traditional systems struggle to deliver. Tokenization is emerging as the solution. Ripple's long-standing relationship with the Standard Chartered strengthens XRP's relevance in this transition. Since 2016, both entities have collaborated on cross-border payments and tokenization initiatives, including Project Gorgon in Singapore. These aren't isolated pilots, they are regulated, institutional-grade implementations. This shift reframes XRP from a speculative asset into infrastructure-level technology. As banks adopt distributed ledger systems for real-world settlement, XRP's role becomes increasingly tied to efficiency, liquidity, and global value transfer. In this next post from Skipper, we have the question, why did the Evernorth CEO call XRP a payments asset, not a speculation tool? Ashish Birla's comments cut through years of narrative confusion. XRP, he explains, was designed from day one for real-time, regulated payments, not congestion-heavy smart contracts or store of value speculation. Its speed and efficiency were intentional, not accidental. Early features like XRP's built-in decentralized exchange reflects this payments first mindset. These design choices anticipated institutional liquidity needs long before similar concepts become mainstream in crypto. According to Birla, many modern projects are now recreating what XRP already had years ago. Regulation plays a critical role here. Birla emphasized that global payments require compliance, clarity, and scale. XRP's regulatory positioning makes it attractive for enterprise adoption, reinforcing its identity as financial infrastructure, not a short-term trading vehicle. And our final post here is from CoinVo. And we have the question, what would XRP integration into PlayStation Network mean for adoption? The rumored PlayStation Network integration, while unconfirmed, highlights growing interest in crypto-based payments for massive consumer platforms. Sony's existing exploration of blockchain and digital assets lends some context, even though no official confirmation exists. If XRP were integrated, even optionally, the impact could be massive. PlayStation Network serves hundreds of millions of users, potentially shifting XRP from an institutional settlement tool into a consumer-facing payment option. This would dramatically expand its visibility and real-world usage. However, caution is essential. Regulatory hurdles, volatility concerns, and user experience challenges remain unresolved. Until confirmed, the rumor reflects market curiosity, not certainty, but it underscores how expectations around XRP adoption continue to evolve. And finally, my own overall personal opinion about this is that these developments paint a picture of a long-term positioning over short-term hype. XRP's price may fluctuate, but its structural integrity, institutional alignment, and payments-focused design continue to strengthen its case. Whether targets like $5 or $27 materialize soon or later, the broader trend suggests XRP is being built for endurance, not speculation. And this finally ends our video. Thank you very much for watching and see you on the next one.